Hi everybody, welcome back to the show. I have the great pleasure of sitting here today with Warren Hogan, who is the Managing Director and Founder of EQ Economics. He's also the Chief Economic Advisor for Judo Bank, regularly contributes to the Australian Financial Review and Sky News, and is the former Chief Economist for ANZ. Warren, welcome to the show.
Thanks for having me. It's good to be here.
No, always a pleasure, mate. I should say we've had the pleasure of having Warren on the show many times. We've worked together on the Buy Grow Sell Summit, and we've done State of the Markets. Warren, I always love chatting to you because not only do I find that you're the most sort of up to date, I guess, in terms of the advice you give. It's so very specific to business owners, and I love the fact that you don't mind being a little contrarian and speaking your mind. So, I think something that business owners actually truly appreciate. So very exciting to have you back, mate.
Thank you.
Let's get into it. I know that you've been out there sort of talking a little bit about inflation being a bit stickier than perhaps the RBA even want to believe. Where does this sort of sit right now, particularly given all the sort of global conflict and everything else that's happening?
Yeah. Well, I hope because we've seen this conflict in the Persian Gulf and the disruption to oil and fertilizer and some other markets, that we don't forget that we had an inflation problem before. And this is going to really expose that, but it's not because of this. It's because the strategy that the Reserve Bank did, which is completely at odds with anything they've done in the past and really what other central banks did. It was, as we now know, a bit of a hope that you don't have to raise rates that much anymore, that you can get inflation down and protect unemployment. And, and of course unemployment's low, and that's great. I'd argue that it's actually nothing to do with monetary policy. That's a demographic shift related to labour shortages. But of course they didn't get the inflation under control. And what we learnt over last summer was that final confirmation that when the economy last year started to pick up, the private sector activity started to pick up, inflation just popped straight back. So, this shock to the global energy markets and other markets, global supply chains, couldn't have come at a worse time. We're uniquely exposed compared to other nations which had tightened monetary policy enough and had got inflation down and stable. It wasn't probably as low as they'd want, but it was at least not rising. And we're going to see this shock sort of interact with this domestic inflation that was bubbling away there. And look, we'll find out over the next few months, but we're in for a bit of a rough ride, I think, and we're certainly going to get quite a bit of inflation. In fact, we've already seen a whole raft of prices go up, because what economists look for is not so much the petrol price going up by 30% and therefore the headline CPI going up to 5%, which is what's sort of happening. It's the second round effects, because petrol prices are actually coming down again now, and eventually they'll probably stabilise at a new level. They'll stop going up by not going up by 30% every month, sort of thing, because that's what inflation is. It's prices going up every month, every year. And so in terms of this shock, what you're worried about is not so much the initial price spike of, say, petrol. It's the second order effects into the cost structure of the economy. And because we had already an inflation, excess domestic demand, we're overrunning this economy, government spending, all that stuff, that second round effect is happening really quickly, much quicker than we've ever had before, what's happening overseas. And I suspect it's going to happen with a greater magnitude. And we'll find out over the course of May and June when we get the official statistics. I mean, I hope it's not too bad, but we could be in a bit of a pickle, the RBA, and especially if the economy gets through this. Yeah. In a way, the worst thing from an inflation point of view is that this shock out of the Middle East doesn't sort of cause the economy to slow down, because if it did, it might take some of the sting out of that. If the economy gets through this and breezes through it like it did with tariffs last year, markets are at record highs, things keep going, people keep borrowing, keep investing, who knows where the inflation could go. The RBA, could be in real trouble. We might have to raise rates a lot. And, then you get into this, it's a really unstable economy. They're chasing it. That's exactly what happened in the late 80s, and then that ended with a financial crisis, i.e. the recession we had to have in the early 90s. So let's hope we're not going there. But that's what the RBA and the government, through not in any way, shape or form showing any restraint with their spending, taking all the extra revenue they're making from bracket creep and the inflationary economy, then spending it. Let's just hope these policies don't get us into real trouble in the next few years, because they've left us open to that risk.
Yeah, it sounds like, the cracks were already there, and now the pressure of the global environment is just widening those cracks. And like you say, I think it's interesting that, we talk about the headline petrol price, but as you say, look, just the knock-on of the cost of oil and everything else, and it's through every part of our economy, right? So it just, you say it's a really layered effect. Warren, I think you're known for being very accurate in terms of predicting interest rates. I think even the AFR named you as one of the most accurate predictors. I'm putting you on the spot a little bit, but what is your view going forward for the next 12 months?
Yeah, so I'd be even more accurate if the RBA did the right thing. I can forecast what 27 million Australians will do, but not 9 people sitting at the RBA. Look, we obviously got to have high rates. Unless this economy sort of has some real adverse reaction to what's going on with supply chains, with energy costs from an activity point of view. Unless there's fishing fleets stop, farmers stop planting crops, trucking businesses fold. Unless we start seeing some real economic distress out there, the RBA's just got to get on with it. They just don't have it in them, I think, given what we've seen over the last few years, the people on that committee. And actually, that's the point. We've now got monetary policy set by committee, so that's always hopeless, especially when you've got people on there who don't know what they're doing. They're not macroeconomic experts. They're experts. Saying you're an expert in labour markets when you're sitting there trying to do something for the whole economy, you're supposed to be an expert in, Great Barrier Reef turtle life, because you've got to be an expert in the overall economy, or else you're not going to get it. And even then, these people out there, and we've seen it time and again, get it wrong. So we've got this committee that means they won't be courageous, they won't have conviction. And look, I think the cash rate's got to get up to at least 5. They've got to get that real interest rate. So the real interest rate is essentially interest rate minus inflation. Our growth potential at the moment, unfortunately, is only 2. It used to be 3.5. And you've got to get the real interest rate up towards that growth potential. So they've got at least 100 points of rate hikes in them, and let's hope it's not much more than that, because that's going to start to really bite, and particularly the household sector. And that's what it is. The household sector is where the pain will be felt. We've got to slow. Unless the government decides they're going to really cut back on spending, which doesn't look like they are, then it's those with mortgages exposed to interest rates that are going to cop this.
Well, it's, I think too, it's the housing sector is obviously a very topical issue in Australia. We keep talking about the housing crisis and things like that, and there seems to be this idea that homeowners or even investment, property investors should somehow absorb this so rents don't go up as well. And I just think it's not a realistic perspective. They're going to pass that on. Rents will continue to go up. We'll continue having a housing crisis, and it just keeps to be this knock-on effect constantly. There's a shortage of housing. Now, how much of that can be explained by the fact that there's people who own a lot of properties that actually no one's in, and if they were freed into the market, would that have a material difference? I doubt it, a bit of a difference. But we need to build more housing, and we're going to keep running with a reasonably robust immigration program, because that's what this country is, and that's what we should be doing. So we've got to get on with it with the housing. And then the thing is, the cost of building now has taken another leg up. Just in the last couple of months, it's gone up another 5, 6, 7%. And it ain't going down. We saw the big hit in the pandemic. We saw it sort of run through for a few years, then stabilise and started to creep up in the last year, and then it's just taken a step up with this shock. So look, the house prices, if the RBA has to really start putting rates up a lot, like take it up to a 6%, 200 basis points from here, and people are forced to sell, investors get out, house prices can fall 20, 25%. We've seen it in Canada, we've seen it in New Zealand, but that's for a year or so. They're going to come back. But I wouldn't be betting on house prices going up much in the next few years. They probably will fall, 5 to 10% over the next couple of years, and that actually is not a bad outcome. If you're an investor and you're leveraged and your transactions matter, well, that's the game you play. If you're an owner-occupier and you've got a long-term view, it doesn't matter if house prices are sort of nowhere for a few years, particularly given they've gone up by 50% in the last 5 years. Brisbane house values are double what they were in 2018. It's higher median now than I think than Melbourne. So you've said the businesses are navigating shifting sort of input costs, changing demand patterns, tighter supply chains, etc. Which of these do you think is sort of hitting business owners more right now? And is, I guess, are there any that you think just the broader economy or the broader community are just underestimating?
Yeah, well, I mean, I don't think the broader community understands just how much pressure on business owners, like, not big corporations and stuff, but people who run mid-sized companies, small businesses. And look, there's a structural thing that's been going on for probably 5 years now, and that is basically that we have structural chronic labour shortages, so managing your workforce is just harder. It's harder to find good people, it's easy to lose people, you've got to pay. Add on top of that a whole new regulatory sort of layer that's happened in the last 4 years of this federal government, and staff management is now the new sort of heinous horribleness of running a business in Australia. The old saying years ago was, it'd be a great business if it wasn't for the customers. Well, the saying is now, it'd be a great business if it wasn't for the staff. And that actually leads to the fact that we have something to cure that, and that is AI, but we can come back to that later.
Yep.
But the other thing businesses, so that's the structural thing, that ain't going away ever, and hence why AI is very real and needed. But the thing in the short term is margins, is just cost pressure and being able to pass that on, and sort of understanding in your own business, in real time what your margins are doing, and not realising 6 months later, I'm not making any money, I better try and put my prices up.
Yeah.
People again underestimate that some businesses don't have real-time analytics on every part of their operation. They're sort of, just like a lot of people live week to week or month to month, a lot of businesses operate that way. So businesses have got another wave of cost pressures with this shock. So this has been going on for a few years, and then there was some relief in the sense that, not that the cost pressures went away, but because the economy picked up last year, they were able to start putting prices up and take some pressure off their margins. That was why the inflation came back. And then now we've got a whole new wave of cost pressures. And the thing that really worries me is that labour costs in terms of wages and so forth are really going to start picking up in the next year or so, because when you get these headline shocks to petrol prices and then it starts filtering through quickly, I mean, people quite rightly want to defend their standard of living, same as the business owner wants to defend the margins of their business. And that's what inflationary spiral, persistence, whatever is. And this is the problem. We never took it seriously enough, because we haven't seen it for over a generation. And that was the Reserve Bank's job, to be leaders in this, and they failed. Yeah, it's sad to say.
It's an interesting one. I, in my experience, sort of dealing with business owners, I find small to medium businesses they traditionally are slow to pass on cost increases. And even if they are managing data, they feel the sense of competitiveness in the market, and
they want to do the right thing by their customers. Obviously, it's depending on the industry, but they don't want to be putting prices up, and they certainly don't want to be putting prices up when they know people are doing it tough, and they don't want to put prices up if they think people are going to stop buying their product. So it's just not good. I mean, the benefits of low and stable inflation are just massive. We saw that for 30 years. We've had one of the best performing economies. It was a good economy to run a business in, and now it's so much harder. And there's randomness too, and there's it's sad that we're just not, that our government is just completely unwilling to tackle inflation. They're just so much more sensitive to the ability for them to spend and get more taxes, because inflation creates more tax revenue. And of course, to just, not let the RBA raise rates because it's politically tough for them. But it's got no leadership. It's got no sense of what's best for the overall community over the medium to long term, and that's what's I think the Australian people are understanding that about this government and getting quite disappointed about it.
Obviously the RBA has shifted in recent years in terms of how they report and when they meet and stuff like that. I mean, other than that as an obvious shift, do you see the RBA being run differently than it was 10, 20 years ago?
Well, it's been run differently than it was 4 years ago. I mean, this treasurer has gone in and done this once in a 50-year review and taken all the recommendations and implemented it, and taken the way we run our monetary policy, which is essentially by the RBA, which is an exceptionally successful central bank and one of Australia's greatest public institutions in this modern economy we've built. Take it away from the leadership of the RBA, setting monetary policy with 9 eminent Australians appointed to that board to keep an eye on them, to this idea of, no, it's not the RBA setting monetary policy, it's this committee that the RBA is part of, and so-called experts, which aren't macroeconomic experts. Because the only thing about setting monetary policy is having a sense of where the economy is going and anticipating that. Working out what the right interest rate is isn't the hard part. Well, it actually is for some people, and they're getting it wrong, but actually the real skill, what Glenn Stevens and Ian McFarlane and Phil Lowe spent their whole life training for, what I've spent my whole life training for, is trying to get a sense of what the next year holds, and then working out what is that, well, in their case, what it works out from what it means for interest rates and monetary policy. We've lost that, because you can't do that by committee. Because you've got to have that conviction that it's a feel thing. I mean, it's like anyone who does something with excellence, whether it's in business, sport, what have you, is, it's not just all mechanical.
It's art and science, right? There's always an element of that. And the only way you get the art right is through the experience and the knowledge of people who've been around doing it a long time and seen the patterns, right? Which I guess is particularly concerning if a lot of these committee appointments are political appointments. Interested in your view a little bit here on without going down the rabbit hole, but from a global kind of perspective. There's a lot going on in the US that they seem to be shaking up the way they're approaching things with their central bank, and it seems to be a lot of political pressure to push rates down over there. I mean, do you see what's going on there having more impact on Australia in the sort of medium term?
In terms of their central bank, I sort of hope not. The guy that Trump's appointed, Kevin Warsh, is a expert. He was on the Federal Reserve Board when he was quite young, in his 30s, as a governor, and this guy's not a whack job. And the view that they might be able to cut rates is actually a view of how well the US economy is going. They're at the leading edge of this technological revolution, and they're at the leading edge of the application in everyday life. And that's because they have this, well, it's a brutal form of capitalism, but it's a flexible economy, and it's getting productivity like there's no tomorrow. I mean, we're in our knees when it comes to productivity, something we haven't seen in this country for 50 years, and yet the US is scooting ahead. And that productivity helps keep inflation under control. In fact, it's what we need is, because there's labour shortages, you get AI to make up for it, and that makes every worker more productive theoretically, and not so much the workers using AI, but the fact that the AI is producing output. The fact is the US economy is doing well, and this inflation shock doesn't help, is that he may be able to cut rates a little bit, but he's not cutting rates a huge amount, and I doubt he will, because the economy is doing well. Their interest rate's around 4, and inflation over there is a little bit high. But what we need, and what Australian business needs to recognise, and I've said this to a few people recently, is this US economy right now is actually going to streak away from the world. And if you can get exposure to that, whether that's part of your business, learning from what's going on over there, it's really important. And look, recent sort of events aside, Australia and America are very close. So the fact that we're doing it, our macroeconomic performance is so poor. I mean, look, maybe it'll take a recession or something like that for us to, at a political level, change of government, change of approach to the way we're doing things. But we will soon sort of learn from what the US is doing right.
It seems to me too, and I go to the US a bit with business. Their labour laws are very different to ours. There's people who, if there's underperformance and things like that, and don't get me wrong, I think the pendulum can swing both ways, right? Like it can go too hard.
You've got to get the balance right.
And
I think we had that 10 years ago. US is brutal, and of course what people are looking at the Middle East, and that's a challenge, and inflation, that's a challenge, and sure. The real challenges, the structural big shifts that are causing our whole society and economy to start changing in ways that we've never seen before, and we're probably going to experience some of the biggest changes in our society and economy for generations in the next 10 years. And what's driving that is, first of all, demographics, and that is the retirement of the baby boomer generation is creating a structural shortage of labour, and that's after we've had 50 years of having excess labour, where unemployment was a problem. And and we've got the technology now coming in to help us, because the only way you fix or solve for this issue of not having enough workers is not immigration, because you in your firm, you have a shortage. You need a carpenter. You go overseas, you get a carpenter. Fine, that fixes your problem. But when that carpenter comes into our country and our economy, they need a Bunnings and a road and a house and a hospital. It doesn't fix the overall economy's balance. So your immigration doesn't solve for it. You can do what the Japanese did and build your next factory in another country, which we're not really a manufacturer. It's technology. And we've got to, it's happening. You don't put these things in the box. And the sooner we recognise this as a nation, as our economic policy makers, then the quicker we're going to run with, swim with the tide. And we're not at the moment. US, sort of whether the government is or not, and I don't think they're particularly focused on this dynamic, but they're not sort of running things against it. But it's that natural flexibility in their economy, which is allowing it to adjust to this. So the ability to, we need to displace workers, and that sounds terrible, but we can't, throw them on a trash heap. We need to put them into other jobs. We have got 340,000 job vacancies in Australia right now. Every state police force, most hospitals, defense. Every school, defence. I mean, it's really one industry that doesn't have structural labour shortages, and that's finance and insurance. That's a shame that we chose those as our career. But the point is, we've got to learn how to retrain people. It's not easy, and it takes courage from leaders to get people to do things they don't want to do, but which is good for them in the long run, because they're going to be moved into jobs with purpose, higher incomes. They're going to be doing things that people need done. And that means change, and we've got a leadership that just wants to do the opposite. They want to lock everything down.
Make people happy in the short term and win an election.
Well, and just that's their ethos, right? The job security, and that doesn't. It's we're going to pay a price. We're paying a price already.
It is interesting, I think, that this point about retraining, because certainly the business owners I'm dealing with are talking, everyone's talking about AI and how do you implement it, and everybody's on a different scale in terms of their implementation around that. But I don't think I have a single business owner that I'm talking to that says, I'm so thankful for AI so I can let staff go. They're all saying, I'm so thankful for AI so I can now reallocate that labour to other things that are going to drive more value for us.
And that's what is really happening, is expanding by investing, expanding without FTE or so that's right. And the first wave of what we've seen is really just individuals getting Claude or Copilot, but this next step is how do you change whole business processes. And the
automation
thing is, people go, AI is virtually free, right? You go, okay, fine. But the real cost is actually how do you work out how to disrupt your own business? So
before someone else does.
And take your best staff offline to get them to work out how to use AI and only use 2 workers at 4 were doing something before. So at the moment it's just sort of organic. But the way to really move the dial is to reshape whole processes. And obviously our big financial institutions, banks and other companies like that are probably going to lead this here. But the advantage smaller businesses have is they're smaller. But, it's a bit of a black box for most people at the moment.
Smaller businesses can definitely, I think, implement quicker and test things out, but then again, they also don't have that buffer of, okay, we can afford to take people off this, and move them for a while and wear the hit,
and look, through the work I'm doing with, say, Judo Bank, who wants to fund businesses, and they've got a bigger, good risk appetite, they've got a different approach, they want to look at a business owner in the eye, and if they've got the right intentions, they'll back them, this sort of thing. With this technology wave, it's not about going out and buying a piece of equipment or a new factory or even software. It's actually, liquidity while you're having to run, say, too much headcount for your P&L or your revenues to reshape the business, and getting business owners to think. I mean, most small businesses and many mid-sized companies, everyone's just flat chat doing the job at hand, let alone having strategic view and strategic projects.
And I think it's having the courage to hold the line, because it's, any kind of change comes in small to medium businesses. Usually your performance dips before it turns again, right? And I think...
And that's the investment.
Correct, right? And I think there's a there's going to be a bunch of people who start going through that change and probably will get very concerned and may not ride it through to get the benefits. And it's, there's going to be some knock-on effects there, I think, for small business.
And,
so they don't...
and with that, you're seeing this generational shift in business ownership. This is the first generation, and you tell me if I'm wrong because you're the expert, but the first generation where the amount of kids wanting to buy the business, the natural ownership transfer is very low.
Yeah.
And so we're working out the industry you're in, mechanisms for that. So we're also, and I'm seeing this more and more, whether it's a displaced worker from a consulting firm or a bank who's in their 40s and 50s, they're going to go and buy a business. There's more of that going on. But the thing is, does that work, that person who's had some experience at business, commercial, but not necessarily running their own business, are they going to have the courage to come in and they actually, at the get-go, with a blank canvas, try and work out how AI can help? I mean, this is all remains to be seen.
Well, and it sort of goes against what I think you see as good policy and good transition management. People come in and buy a company. My advice to them typically is don't do anything for the first 6 months at least, because you need to learn it, right? Understand that you may not agree with how things are being done, but learn why it's being done that way first before you start chopping and changing.
And then now that 6 months is learning, about the business, but also with a lens about how can we, use this technology to make it more efficient.
Definitely.
Which, probably more than half the time for the foreseeable future isn't going to be about getting rid of people. It might be reallocating them or giving them some retraining or whatever, but it's about how do you make the business bigger and better.
Yep. Warren, you touched on one of the topics that's kind of close to my heart is around succession, and there is a big, I think, macroeconomic piece here that, I talk about us driving towards a succession cliff that nobody really seems to be talking about. And referencing the US here, I think they've been on the ball with this for some time now, where they've seen the demographic shift, that everyone recognises baby boomers are retiring, etc. And we're facing really a lot of businesses that are not going to be able to sell because, well, one, you've got to make sure that the business is saleable. That's a big component and something, perhaps we can be helping them with. But I think too that there is not a lot of finance for smaller businesses. You want to fund a business that's, turning over $50 million and has a, $5-10 million profit, banks tend to jump all over it. You get a business that's turning over, $2 million and is employing 4 people and has a profit of 200K. There's just a lot less interest in funding those types of deals. And what we've seen in, we talked about the stats just in an earlier interview here, but there's 2.7 million private businesses according to the ABS. MYOB surveys tell us that 50% of the boomers in that category are all retiring in the next 5 years. Many of these businesses are not being sold. We see that with the sales data going on, whether it's from some of the bigger platforms and just our own kind of observations. And when you talk to people about why deals have failed, so many times it's not because they can't find a buyer, it's because they can't get funding. And I know in the US they've got small business administration loans. In Canada they have a similar program whereby the government has come out and said, okay, we get this problem. We'll provide a program to, not to give money, but to give a bit of a guarantor to the banks to enable them to loosen the purse strings a little bit and engage with business that they might traditionally say no to. And I think the thing about this is okay, one, we need a policy setting that helps support some of this, because nobody expects large profitable banks to just take on more risk if they don't need to, right? I mean, they're profitable, they're making money, that they need an incentive or a reason to kind of want to go down that path. But I think from an economic perspective too, the thing that keeps baffling me is, we've got lots of information and policy and things like that encouraging people to go start a business. And, yay, we need innovation, right? We need people to go, I've got an idea and I think I can change the world. Great. There's lots of information and grants on how to grow your business and hire somebody and do that sort of stuff. Excellent. But, we also know the statistics around small business failures, right? And we talk about 70% failing in the first 2 years, 95% failing in the first 5 years. And I think surely at a macro level, somebody in the government's got to be thinking, wouldn't it be easier to actually help somebody buy an established business that's been around 20 years, has customers, employs people, right? They are paying tax. They are employing people who also pay tax. Rather than just letting these businesses close their doors, where we're not only just losing the jobs and the employment, but now we're losing the tax base, but we're losing skill sets, right, that aren't just easily replaced. And I think there's a mismatch here between the understanding of where government's at in their thinking and what's going on the ground.
Yeah, yeah. No, well, I think at the moment that's true. I mean, there's a lot to that. But so in the financing side, I think there's definitely some scope, given the structure of our banking system, to provide a bit more of a safety net for the big banks. But one of the reasons judo bank exists, and one of the problems we have when we have a concentrated Big Four policy, that if they're just there trying to maximise their profits, short, long run, whatever, it's got to be more than that. The reason we've got this banking system is for safety, but it means that the leaders of it need to sort of show some character, and it's not Team Australia moment in a GFC or a pandemic. It's every day of the week. Yeah. But they're not doing that, of course. They're trying to make as much money as they can. So the big banks, their biggest problem is understanding risk at that micro level. So they just shy away from it because, as you said, they don't have to. And look, maybe they're going to have to if their mortgage books aren't making the money, if there's interest rates. So if interest rates in Australia go from 4 to 6, that won't really matter for most businesses unless they're leveraged massively to property. It's going to hurt consumers. Yeah. So, and that's where the banks have been sort of doing everything. They're big building societies, and they've been looking at lending more to the business community and putting more emphasis on that side of their business for a few years now. So that's one thing. The federal government can help for sure, and those programs overseas, I'm sure, would be a good guide.
Yeah, well, certainly I think Canada. I mean, Canada's, and correct me if I'm wrong here, but I look at the GFC and Australia fared very, very well, next to Canada, right? Canada may have even performed better from things I've read, but they've got a solid system, and there's a lot of similarities, I think. And
no, Australia and Canada, we're same sort of banking system. It's different to the US, and actually the UK as well, where you've, got, in Canada, I think it's 4 or 5 big banks. We've got 4. And their economy has got commodity export linked to China, and then, of course, when really expensive housing, of course, they raised their rates to a level that did deal with the inflation. It also triggered, along with some tightening up of immigration, a big fall in property prices, and that's meant their economy's been soft for a while now. But is it the end of the world? Did the whole thing fall apart because of that? No. Is Canada better placed for going through that? Point being is, yes, we're very like Canada, although we've taken a bit of a different path in the last few years. In terms of the broader issue about, there's some work being done about, and this is a bigger picture story, about the loss of small business. And what does that actually mean for us as a community, as an economy? Because there's a vibrancy, if everything's corporatised and it's all, government's growing, and, it's just all of that. If we're all just employees, what's that mean for our society? And it sort of doesn't sound good to me. Yeah. I know that the Liberal Party would certainly, this is something they would have a tradition with and would be a differentiator. But the think tank E61 has done some work on this in this country. Okay. So look, I'm not sure that the current government would be all that interested in this, but certainly if there was a Liberal government or a coalition government, there would be a lot more, there would be a real desire to try and encourage it, because I think we are seeing it being really tough for small business. Final point, big technological changes. Young people don't want to buy their parents' business or inherit their business, but are we going to see, because of technology, a whole raft of new businesses forming up that are either doing what people were doing before but doing it differently, i.e. not wanting to take a business that exists and have to try and reinvent it, but just starting from scratch? Or is there just new business? Because encouragingly, there is a lot of new business formation going on in Australia. So look, it's certainly a key issue for more than just your industry. It's a key issue of our community.
Mate, final question, I guess. If you're a business owner, which you are, but you're sitting here with say a 2 to 3 year exit horizon. We all know things take time, but is there anything that you, in particular, as a small business owner, would be watching and thinking, okay, I've got to keep an eye on these couple of maybe key indicators, or be more prepared for what might be coming? Yeah,
well, look, we're going to have a bit of a bumpy ride. So the geopolitics is obviously a good sort of headline to suggest the world's, it's not all, we'll tiptoe through the tulips. But actually there is massive structural change occurring in our economies because of this demographic shift, because of this technology that's coming in. And when your policy makers and when people don't get it, and they don't, I've been talking about this for years. I've just sort of stood out to accurately forecast a problem that no other economist sort of did, and it's still, people aren't sort of at my door going, well, how did you do that? It's like, it wasn't a guess, it's been 3 years. People resist change. So it's going to be a bumpy ride.
Yeah.
And so if you're trying to exit a business, I mean, you know, you're the expert actually, so you should be answering this question. But the thing is, you just, you know, I'm not overly concerned about, the thing is that the biggest problem, I imagine, well, there's two problems. One is, you know, is there going to be a credit squeeze at some time?
Yep.
And I'm not overly concerned about that. Where the first baby boomer turns 80 this year, that's a really significant number, because in this day and age, 80 is when you really shift. And so they're no longer sort of saving or running down at a moderate rate. They're really starting to need it, healthcare, pulling in money. So credit's going to, or liquidity savings are going to start tightening up, but that's going to take years.
Yep.
So I'm not worried about the credit squeeze, i.e. the access to finance sort of thing in a more broader sense. What I think could happen though is if, you know, especially in this country, you're letting inflation go, rates might have to go up to a point where it sort of breaks something.
Yep.
So asset prices could fall 20%. And what you don't want to be doing is transacting when that happens.
Yeah.
So you're going to need to be agile and watching to make sure that you're not lining yourself up for a transaction just as the whole thing goes pear-shaped.
Yeah.
Because we know that the long-term fundamentals are great of this country, of the world. This technology is going to make the world such a good place. Yeah, we've got to regulate it. I know there's a lot of fear out there, but we will work this out. We always have as a race on this planet. It's so you got to be prepared for this sort of bumpy, the choppy seas to get to the promised land, so to speak, from a technological point of view, and you don't want to be caught having to transact when you're in a bad part. So you've got to keep an eye on the macroeconomy, which is sort of why I'm doing what I'm doing. Because I do think there is just this need for businesses in Australia more generally to keep an eye on it. Because the last 30 years, you had a great economy.
Well, I don't think my kids would know what a recession is. So, you know, it's, and maybe that's a good thing in some ways, but it's,
well, the thing is, you know, there's lots of different recessions. There's technical recessions, which, you know, that's just 2 quarters of negative growth. When you can only grow at 2% these days, that's not really anything. There's a garden variety recession where businesses that were probably going to fail, it just all happens at once. And then there's the thing you really want to avoid. It's a financial crisis. And that's when you deny the economy liquidity. That's when people pull right back. That's when businesses fail that do have a future.
Yeah.
And that's the scarring. The thing is, the first two kind of recessions don't do that. But we've had this mythology in this place, led by some economists and political people, that any recession has to be avoided at all costs. Well, you know what? You do that, you don't take a little bit of pain in the short term, you might end up with the bad stuff.
Yeah, in the long run.
And I think that's unfortunately where we're at now, and hence why if you're looking to transact, you're looking at doing something, or I think just managing a business, you know, it's going to be a tricky couple of years. I think you need to be a little bit conservative on things, but I think you got to take a long view on your investments. So you still got to keep investing.
Yeah, sounds to me like small to medium business are going to have to get back to their roots, which is diving into their pool of resilience, keeping an open mind, invest for the future, maybe don't over leverage yourself. But,
staying optimistic, you know, and
you know,
that's what leaders do, they're optimists. So yeah, that's right, but there's opportunity, you know, so you're in an industry, suddenly this volatility or people retiring can't sell their business easily, you got a bigger market all of a sudden.
Yeah.
You go and buy their equipment, whatever, and get their staff, because that's the biggest pain, is getting hold of good quality staff, keeping them, paying them, all that, managing them. And I think that's going to be the biggest issue for business owners for the next 5 to 10 years.
Yeah, fantastic. Warren, thanks so much for coming on the show. I really appreciate your time. For those who want more information, head over to eqeconomics.au, where you'll get more information from Warren, and he's constantly in the media releasing new stuff. So keep an eye on him. If you're not following him on LinkedIn too, just jump on there, you'll be able to find him. So thanks again, Warren. It's been great.
Thanks for having me on the show.